Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Tesla stock for this coming week. Let's identify, should we be expecting bullish price action from Tesla for this whole week, or are there some elements in the price action telling us that we can be going lower? Like, what is the price action telling us all in all? How do we place ourselves going into this week? And if there are already open positions, how to handle those positions, right? So I'll talk about from the lens of technicals and the price action. As for what cases may happen that will keep the structure in, let's say, bullish or bearish, and that will help you to make your own decisions where how should you size and size out your position, and where are the places to enter or have a stop loss, and all of those things. I'll talk about that. Now, nothing is financial advice here. Everything is for educational purposes. I'm just sharing my opinion here, nothing more than that. All right. So what I want to start off with today first is weekly interval on Tesla, because now the question is, can Tesla finally shake hands with $200, right? Can it do that? So let's see what are we seeing on the weekly interval first. So Tesla for more than a year now has been in this weekly downward channel. Now finally, I know we had this one breakout out of this channel to the upside as well, but then you can see we did reject pretty much. We had another resistance line running over here on the channel side, and we rejected over there, right? We kept rejecting that and we finally sold off. So that was a one-off, but since it was also at the already extension and higher up, that case is different than the case that I'm seeing here. Now what's that? So we do have now a breakout out of this channel finally, with a good structure here. That is the structure of inverted head and shoulder on this weekly interval that I have been saying for now a couple of weeks, and we are just right above the support of 20 days moving average. The difference that we have is that up there, when we a little bit broke out and then sold off later and got into it, yeah, technically, if any position back then was taken, the stop loss would have been again back under that channel for the long position. But since we were already quite extended without consolidation, it was more prime to be sold off, because we were already in the downtrend, right, from the top coming down. But what we are seeing here is that we are already around the bottom, and we are into the going through the consolidation with the inverted head and shoulder price action support. So this has much more likelihood of staying strong bullish, because it's not at the top of the price action. It's beginning out of the consolidation into the structure on the weekly interval into a bullish territory, finally breaking out of that trend line of the downward channel on the weekly interval, and also getting out and above of 20 weeks moving average. Now this is a really great sign on Tesla. We are taking out day by day these massive supply zones, and as I'll show you the short volume percent data on the daily interval in just a second, this will start to make sense real quick. Now before going further, I want to mark the next important level where I do expect some resistance. All right, you may expect pullbacks or resistance over there, and that would be this area of $200 to $202. Junior Trader, does it mean that we're going up there? Well, let's talk about that. But price action is bullish on weekly intervals still. I showed you inverted head and shoulder structure is going through the consolidation. Support has been holding great. We got out of the channel as well, and above 20 weeks moving average. Now on this weekly swing position, if any position is taken or you are in position or whatnot, I would suggest having a stop loss, in this case below 175, or size out whatever. If we break and start closing the week now below 175, that's concerning, that's problematic. So in this case, stop loss has to be there. So let's go to the daily interval. As for right now, on weekly interval, I'm still seeing much more signs of the bullishness. Now, what I want to show you on the daily interval first is the short volume data. And if you need access to my tools, links are in the description below, everything that I use in my videos. All right, so with the short volume data, this area, guys, was so heavily short. Anything above 35% on Tesla, I consider high short volume. We were getting highly shorted here, 39, 41%, 41, 42% short volume also came down there, but buyers were finally able to hold it higher. So it shows you that short sellers couldn't win. And when this green candle starts to come, you see these spikes that shows you that buyers are still trying to hold. But at the same time, that 178, you all know the pain we were going through at that $178 level. Look at it, 40 short volume percent. That was such a massive, like a short sellers tried their best, guys, but they finally gave up. Then you see on these big green candles 25% coming in. We still got like 38 short volume percent on one of the strong green candles lately as well. And you can see consecutive days we went lower slowly and slowly, but buyers are not giving up. You can see the we are in the price section still bullish, and most likely when these high short sellers are coming, once we start to take out these levels, that's what is going to also give us a continuous explosive move. Short volume data is a variable in the equation that I put in the whole confluence of the structure. It's not just that one thing that, oh, it says high short volume and that's it. No, it's one of the variable in the equation that affects my opinion as if what is the price action doing and how short volume is working with that. Are the short sellers playing the shorts at a wrong price action level that they will squeeze out literally, right? And or where once we got out of the resistance level, then short sellers have less chance of winning because we took out those areas of short sellers huge the hammering down that they were doing, right? But anyways, just wanting to show you this data. As for at least for the last day, we do have less short sellers present, but I just want to show you that this area of supply zone, not that 178 and around, is acting as 41% short volume, and they really tried to push it lower, 41, 42. And I don't know why they were trying to short here when I was saying that, guys, the things are looking still bullish on Tesla in the structure. And yeah, inverted head and shoulder as I showed you on the weekly interval. And the rest you can check out those videos back then, guys, on my channel. But I just wanted to show you this. So right now, price action has lot more structural support for the continuation to the upside, as long as on the weekly we stay above 175, and on daily interval I would say if we stay above 180, I'm not worried. Now the thing is that price action will always prevail over anything else, most of it, right? Now what it helps me to do is that when we are seeing a high short volume percent and the price structure is a little bit in the decline with a lower pivot, that's when short volume data, if it's high, it really helps in playing the continuation. But when we are seeing some high short volume percent coming, but the structure is bullish, again, there is guarantee of nothing, but we have to build a likelihood case. The probability confluence has to be above or around 80%. And since the structure is still to the upside on the daily interval, we have a higher low still. This is still a higher low pivot and a higher high. We have the price action still in the bullish phase. And right now, at least the last short volume data percent is also lower. So as long as we continue to hold above 180, the short sellers will be ineffective. And eventually, as we continue higher, we will be squeezing them out. So I mean to say that when we are forming a lower pivots and short volume is coming high, that's when that variable can be used in the equation to play with more confidence the downside. But when we are in an uptrend and if you see a little bit high short volume, then just take it as a grain of salt. Don't put too much emphasis on short volume data because price action is still holding support. But anyways, it's just one variable in the equation. All right. So on the daily interval, I showed you we are still bullish. We are above also 20 days moving average and also above 50 days moving average. And as I said, as long as on daily interval we are above 180 and on weekly interval, as long as we are above 175, structure is still bullish. I would most likely not want to be in any position on the long side if we even lose 180. I know 175 on weekly looks great, but I really don't want to be in any long position below 180 because daily structure will start to change, and then it's better than you wait and see how things happens around 175. But we would need to get out of this channel again to be bullish. But anyway, so let's go to the hourly interval. And what am I wanting to see on Tesla? I showed you the pivot. We are still bullish. We are also above 200 hours moving average, right? Now, if Tesla can continue above 184 and 21 cents area on Monday, just getting up, it's just plain bullish, all right? And then definitely this is the area, then 186 and 190 is again a possibility. Now, the case to the downside, at least for intraday, right now, I would stay away from intraday short. Why so? Because as I showed you, structure is still bullish, guys. On the daily interval, we still have higher lows and higher highs. And even if, let's say, we break the level of, this would be the little bit of break of level, like if we lose 181 and 23 cents, that's a little bit of a break of structure again in this lower pivot that is intraday, at least lately it is in. And however, we just have 200 hours moving average sitting down there. We also have this channel trend line as a support now sitting down there. And also on the daily interval, we also have this 20 days moving average sitting down there. So intraday short is a risky trade, even if we start to lose some of those intraday levels, because there's still just support sitting down there. So right now, even if it starts to become weaker by breaking those levels, like these 181 and 14 cents, I would still not trade it short, just because there's just a lot of underneath support sitting, which intraday may just give it these rebounds. You are still better trading off, even if it sells off at these levels, when you see on lower time frame double bottom forming and things along those lines. Like for example, if I can show you some of that price action, like for example, if you see these structural holdings, double bottoms forming, right, and like double bottom at those significant levels, you can still trade intraday rebound long. It's because the structure is still bullish, so and there's a lot of support still sitting underneath. You're still better off trading it intraday long, even into those pullbacks, as long as structure keeps holding. And I gave you those levels. Yeah, definitely watch this zone. This zone is a zone where you can still, at least for a day intraday, watch for rebounds if it falls lower, and then intraday rebounds. So now $200, is that a possibility? Well, that's where I do see that as if we continue higher, that's where I do expect some resistance, that we have a previous supply zone and a previous resistance zone areas, right? And oh, what happened? Oh, sorry guys. And then, as I showed you on the weekly interval, is it's much more clear on the weekly interval if I show you here, right? There we have structural pivots sitting here, so that's gonna create a supply resistance as well. And yeah, so going back to the daily interval again, and then also we have the rolling 200 days moving average coming from overhead as an overhead resistance, I mean. And so I do expect that that may also be somewhere around this area, so there will be some pullbacks back then, but that will not make it bearish though. That will constitute just a pullback, and then we'll see how the price action reacts there. All right, well guys, that's it for Tesla. So you have the levels to watch, you have where the structures are of what type, and just want to share my opinion as well. I'll be doing another video later today that will be Tesla's options analysis, and then Nvidia's analysis, and also QQQ SPY, another tech stock. So if you find my videos valuable and helpful, please hit the like, subscribe. If you need access to my tools, links are in the description below of this video. And with that, I'll see you in my next videos, guys. Take care. Bye.